Good morning. Comment Televu. How are you? Hey, it's Wednesday. This is an opportunity for us to gather here this morning to conduct technical and fundamental analysis. So thank you for being a subscriber of Forex.Today. Today we will do technical analysis and fundamental analysis, try to make the sense of the world around us through trade planning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Happy espresso to you. So I recommend that we go through gold, oil, and Bitcoin, dollar pairs. Take a look at euro and pound. See how some of these things are bouncing at key levels. But we also want to take a look at not just the technical bounce, but the fundamental trend. They're not always the same. Ask questions. Let me know how it can help. There's 6,000 videos on YouTube associated with my work. Maybe they'll be helpful. They're totally free. There's also a training course on the FX Bootcamp YouTube channel. I think it's 4 videos, a little more than an hour and 20 minutes maybe. Totally free. If your modality prefers reading, you can buy my book on Amazon.com. Buy it new, buy it used, I don't care. Whatever, man. Whatever's helpful. You'll also find a link to FX Bootcamp, 65 hours of intense, hardcore foreign exchange trading. Right? Training, everything from day trading to swing trading to monetary policy and fundamentals and macroeconomics and trader psychology. 65 hours. They're legit, man. They're good. $88. That's what it costs, $88. Not $1,000. 88. Cool. Helpful, right? I think so. There's a link to tradersway.com. They're a service provider. You make decisions on whether you want to buy, sell, or hold. When you click the button, they execute the trade. They do it quickly, cheaply, efficiently, effectively. Once you're in your position, they pay you your swap. They have good liquidity providers. It's great. And it seems to me they don't trade against their clients, like most brokers do. I like that, especially if they're going to work with me and for me. That's what a service provider should be doing. A service provider should not provide a service and then trade against you. Traders Way seems to have an ethical business model based on a symbiotic relationship with their clientele. I like that. I like it a lot. They earn my loyalty and respect. If you open up a demo account, maybe they will earn your loyalty and respect. So that's tradersway.com. There we go. How about that? All right. Well, yeah. How about that? All right. So let me repeat everything. Darko said that we had a great day trading meeting last night, and I was laughing because it seems so long ago I don't even remember what we talked about, but I'm glad it was good. There was a question about, hey Wayne, can you analyze some low time frame pivots for Bitcoin? What definition of low time frame are you talking about? Yeah, actually, F the chat. That's pretty good. That'd be great. Yeah, you should subscribe if you want sound. Simon, can you please tell me why you're fundamentally long-term bearish on the pound? Their economy sucks. Now, you might go against that, Simon, and say, well, they're going to jack up interest rates really high, and that's going to attract capital. Okay. You might be right on that. But here's one way of thinking of it. If you like, let's say you think Great Britain will eventually pay like 3% or 4% carry, swap, yield, whatever you want to call it. Is that a good deal? What do you guys think? Is that a good deal? You're like, man, I want to carry that. That's going to attract capital, right? Well, you can invest into Argentina. Argentina. You can invest in Argentina and earn 40% right now. Is that a good deal? No, but a lot of risk. There's a lot of risk in Great Britain. You have to be much more definitional. You can't just say, oh, it's too high risk. Dude, there's risk on everything. Okay? What you're supposed to say, well, in real terms, it's not a good idea or a good investment because with Argentina, you have inflation, let's say, of 50%. So, you lose 10%. So, carrying that to this idea, okay, so let's say the Bank of England jacks rates up to 3 or 4 or 5%. Is that a good investment opportunity? Well, the real return won't be 3%, it'll be negative 5%. 10% inflation, so in fact I can put negative 6. And, right, if you saw the recent reports, some people believe Great Britain's going to go to 15% inflation, which means investing into the UK would be like investing into Argentina. If interest rates are only plus 5, but in real terms there's 15% inflation, so in real terms, you lose 10% right out of the gate. Okay? So you have to separate nominal, or do it this way, nominal minus, okay, inflation is equal to the real return. Kind of like risk adjusted. So that would be one way of looking at it, right? That's one way of looking at it. Like the economy in the UK sucks, but interest rates are going to go up significantly. Is that a good investment? Well, that's for you to decide. Well, Claybo, most carry trades would just be based on nominal because, for example, a currency paying 3% in... Oh man, my mouse has just gone crazy. Okay. Normally, we'd only have 1.5% inflation. And so we didn't really care about it that much because you were picking this up as income. There really wasn't a lot. Now you can argue it's 50%, but people didn't really care because the stock market was going up 20% a year and your house was going up 10% a year. And, you know, it was just risk on, game on. It's all good. So you buy an Aussie yen and you're picking up 3% nominal. And plus you're making, 100 pips a day, which is even way better than that. So, it just all gets thrown into the milkshake. Nobody really cares. People care a lot more when they're trying to get to inflation or beat inflation. So that's all. But when there's no inflation, nobody really cares. If you want to get back to that world, the governments around the world will have to jack up taxes for about 3 or 4 years, remove that excess money, and then their central banks would have to reduce interest rates as inflation fell, and then we'd move on .com. Simon says, why can't the central banks raise interest rates higher? Because the financial system would collapse. Okay. Think of it this way. You're living in a house and you're renting. Okay, that's good. You're paying $2,000 a month. One day the landlord shows up and says, the rent on this house is $5,000. Now, it has nothing to do with politicians. In the what should we say? In the mature markets, there's a separation between the banks and the politicians. Okay. In other countries, there's very much a relationship. So anywho, why can't you just raise the rent from $2,000 to $5,000? Well, the person in the house wouldn't be able to afford it, and now you actually lose a tenant. How much money should you start with in Forex? I would recommend somewhere between $10 and $100 million. So let's talk about this. Let's talk about what you should be doing. Because typically a question like that is, hey man, I don't have any money, so can I be successful? Yes, you can be successful, but you're going to need to raise money. And in the beginning, I think you should not trade your money. The second thing is you should get a side gig like a job and save your money and practice for 2 or 3 years before you trade real money. But by that time, you're knowledgeable, you're educated, you're experienced on a demo account, you know what you're doing, you know why you're doing it, and you already have a track record of success that shows you can do this. Meanwhile, you've bankrolled yourself so you can start probably with significant more money than you have now, and you will be on a path to success. But the thing is, there's a 95% chance you'll totally ignore everything I just said. So then the next one on hell, if that's you, if you're going to ignore me on that one, then you should start with 100 million. You should be the son of a billionaire. And I've seen people like this, and they lose $3 or $4 million a week, and they do it for a year or two until they get better. Okay? Yeah. There you go, Angel. Honestly. Lucas says, hey, it could be more than that. That's true. So like when I started Forex, I took it seriously for about 2 years before I opened a real account and eventually quit my job as a venture capitalist. Well, I had a great job. I had money. I had a career. Okay? Like, I don't know, like it's going to sound like bragging, but in my job before Forex, I had been covered in probably 30 or 40 magazine articles and newspapers around the world. I had a real career before Forex. I was somebody. Sound like an alcoholic. I used to be a player. Glug, glug, glug. No, but I had a real life. I had a real job. I had a real career. I was known. I knew people. I was a player, son. And then I ran into Forex, and then I reinvented myself, which is pretty cool. So how do you make $1,000 a day? Well, let's do the math. I want to show you this, okay? And I want you to think about this on how. And then you can reverse engineer from this, okay? What I don't want to pitch to you is that this is a great platform for you to get rich quick. So I'll help you. Before I give you math, I'll just explain what's going on in the real world. Okay, this is Barclays Hedge. They track commodity trading advisors, and they break them down, the CTAs, into trading strategies. This is the real world here. These are firms. They have a lot of money. They're professional traders, licensed and registered in the United States. This is how they're doing right now. Okay, remember, the best of the best. Okay. Hedge fund index, year to date, down 7%. Balanced portfolios of stocks and bonds, down 11%. Convertible arbitrage, -4. Distressed, -3. EM, -13. Various versions of EM, -14, -15, -29. Emerging markets, European, -35. EM, global equity, -15. EM, fixed income, -9. Emerging markets, global, -14. EM, Latin America, break even. Good job, Latin America. Okay, so on and so forth. Emerging markets, Sub-Saharan Africa, -3. Equity long bias, -12. Equity long short, -3. Equity neutral, 1. But it's designed to do that, so they are the beta, so that at least they did their job. Good job. Hey, better than -10. European equity, break even. Fixed income arbitrage, -3. Fund of funds, -6. Global macro. That's us, son. Look at that, boy. Look at that. That's us. +6. We're in global macro. It's the world's greatest investment opportunity. And for some reason, it's still new to institutional traders. Investors, right? Institutional investors. It's still a new thing. Almost all of it is still long-short equity. Multi-strategy, -3. Options, -7. Pacific Rim equities, -8. Tech, -18. Volatility, 2.77 in the red. Dude! Okay, that's year to date. That's 6 months. So you're like, that's 1% a month. Well, that's compounded. That's less Man, this mouse is crazy. Okay. It's less than 1% a month. And that's a 1, by the way. Look at it. I can't even do a 1. 1. Anywho. Less than 1% a month. By far the best. Here's the thing. You're going to tell me, Angel, and I don't know you, so maybe you won't do this, but you're going to say you don't have a lot of money, but you need to make $1,000 a day. So $1,000 a day per trading day, 20 grand a month. Okay? So you need $2 million. Now, a lot of people are going to say, oh, but Wayne, look at me. I make $1,000 a day and I don't even have 100,000. Uh-huh. Well, congrats. See you in 20 years. Not likely. So you got to get to that point where you're like, wow, Wayne, I don't even have 100,000. I don't even have 10,000. Well, then your math is way off. Your math is way off. Okay? Now, can you do better than 1%? Sure. But the way I teach, and I teach so that you trade like a professional trader. And in normal markets, this is a bad year. The actual results there are closer to 2%. Okay, you understand? 2% a month. So if you're doing your calculations, Angel, on hell, and you're like, well, I want to make 20% a month. Okay, so that tells me you have 10 grand, you want to make 20% compounded, which is $1 billion after 1 year. All right, could you do it? Yes. Could you do it consistently for 5 years? No. Because if anything goes wrong, and of course, you might tell me, well, Wayne, I've only been trading for 5 months. Dude, you're going to blow up your trading account. It's just not going to happen. Statistically, you might as well just buy 20,000 lottery tickets. And statistically, you're going to lose on those lottery tickets. Okay? Okay? So there you go. So in a bad year, global macro can produce 1% a month. In a normal year, it could produce 2% a month. And if you're going for 20, it's because you don't have any money. And here's the sad thing. If you can keep it going for a while, that's great. But of course, you're withdrawing 20% of your money per month, which is crazy. So you're making yourself poor in the long run then. So really, what I'm telling you is you have way too much risk. And if you ever get successful and then take your track record and show a wealthy person, hey, do you want to invest in my fund? I'm a great Forex trader. And you give this track record to that investor that shows you take outrageous, laughable levels of risk. And they'll run from you like a zombie apocalypse, like you're a plague. Probably not the answer you wanted to hear on hell, but thank you for bringing it up, because every once in a while I like to get on my soapbox and remind you to think bigger. So, honestly, how do you do it? Well, in the next 3 years, trade a demo account, but don't just trade. Learn how to trade. Learn technicals, learn fundamentals, learn trader psychology. Learn about your own strengths and weaknesses. Spend 3 years, which is only 1,000 days, and become a master of your craft. Meanwhile, work a second job, work a third job. Hustle, bro. Save money. So 1,000 days from now, which is very quantifiable, in 1,000 days, you will have more money. You will be a better trader, more skilled trader, more experienced trader, a more confident trader. And you'll be able to deploy that capital, put it to work, and earn an honest return. And continue to grow your account for years. And I would recommend you keep the side gig so you never withdraw money from your trading account. and you're competing against the best, who are also very experienced, very knowledgeable, very educated, and they're doing, okay, they're doing less than 1% per month. So in July, they did 1.17, and that was a good month. And look, if you can't do 3 years, you don't have what it takes. Simple enough. You don't got it. You don't have the right stuff. Okay. This is a ruthless business. It requires perfection. It's similar to being a professional golfer. If you can't make 100 practice putts a day, you don't have what it takes. Okay? This is the sport of kings and queens. The ones that work the hardest, the ones that are the smartest, the ones that are most prepared, the ones that are most disciplined, get everything. And everybody else is a liquidity event. So this is, think of it like professional athletes. Okay? That's what we are. There's no off season in Forex. I was reading about one of the players. I think it was Kevin Durant. I forget. Did he play? I think he used to play for, was it Boston or something? I don't know if I got the right player. But everybody knew that he had an amazing work ethic, and he was a captain on his team. And he worked harder than everybody else on the team, and people looked up to him. And he was always in the gym. He was in the gym at 5 a.m, and he was doing practice shots, and and he would work harder to be a lead to the other players so that they work harder. And anyways, they're in the playoffs against the Chicago Bulls, and he goes into the. They play a game, and it goes overtime or something, and so you play even more. And when he was done, most people just take the day off, take the night off and focus on the next game and maybe take a bubble bath or whatever you do, an ice bath, whatever it is. But most people were like working on their, relaxing, right? And so anyways, he instead goes to the gym. And he kind of just wants to cry because I think they lost the game. And he's so exhausted physically, emotionally. He gave 110% on the floor and they still lost. The other guys didn't step up as much as he could, right? So his plan was to work out a little bit, but really he just wanted to be alone. And then who walks in the door? Dennis Rodman from the Chicago Bulls, who also just played the same game against him. Walked in. He had already showered and already put clothes on, so he's wearing jeans and combat boots, and Dennis Rodman from the 90s, right? And so there's Kevin Durant thinking, nobody works as hard as me. I'm doing everything. I can't carry this team. How do I get people to step up? All woe is me. And then his opponent from the other team, wearing combat boots and jeans, walks in the room, gets on the treadmill, and knocks out a couple of miles before leaving, wearing combat boots. So the hardest working guy he ever knew was suddenly inspired. Was it Garnett? Yeah, it was Garnett, KG. So all of a sudden, the guy who felt like he's doing everything he can and all this was then out hustled by somebody else on the other team. And realized that, yes, instead of focusing on how much harder he works than everybody else on his team and then making that bring him down, he realized that he just lost the game, in part by the other team just being a bigger hustler than even him. Yeah, Kevin Garnett, thank you. and elevated his game even higher so he could compete. He was inspired. And sometimes we all need inspiration where we get into modes of you're working as hard as you can. Oh, woe's me. You're not finding it. But you got to get bigger, be inspired, either by me or by yourself. Just hearing the words that's all it'll take is just 1,000 days. Okay? Only 1,000 days. That's a business plan, guys. 1,000 days. Break it down into pieces. Okay? Break it down into quarters. I don't like months. Break it down into quarters. What are you going to do Q3? Right? Break it down. Basically 90 days, right? Almost 100 days. Break it down. What are you going to excel in this quarter? What piece of the puzzle are you going to master? Imagine you keep doing that mastery of maybe analyzing bigger charts. Let's say just for 90 days, you master reviewing all the daily charts with daily candles, but then you're analyzing how did this day impact the last day and then the last day, and how did the daily candles interact with the moving averages, and you just get really, really good at the bigger stuff. And then maybe the next 90 days, you focus much more on the smaller or medium term. Maybe it's medium term. And how do you how does the 1 hour interact with the daily? So there are going to be times when the 1 hour is falling, but the daily is rising. And then how does the market react when the 1 hour starts rising with the rising daily? Is it better? I mean, I did all this kind of work in the beginning, and that's how I started using moving averages. I mean, I explain the whole thing in my book, but that's how I got there. Like, oh, there are times when there's congruency among time frames, and then there are times when there's dissonance between the time frames. And I tend to do better when there's congruency. So maybe I need to measure this and separate price and time, price and market, and long-term long versus short-term long or short-term short. I could be short-term short, but long-term long, and then long-term long, right? And all of a sudden, like, oh, there's an ebb and flow. There's a symbiotic relationship amongst these time frames that I can identify and incorporate into my trading. All of a sudden, but you'll never see it if you just trade. You can go to the driving range every day for 1,000 days and perfect your slice. Oh, high and to the right, hit another one. Boom. High and to the right. Good, hit another one. Boom. High to the right, hit another one. Boom. High and to the right. You're perfecting your imperfections. Like John Lennon said. No, John Lennon. John Legend. You're perfecting your imperfections. Instead, you need to break the whole thing down and start from scratch. Okay, you will not trade your way into success. Wayne, I'm making 10 crappy trades a day, and I've been doing that for 10 years. Good. You've perfected crappy trading. You got to break it down. So, on hell, are you actually still here? What do you think after that diatribe? If he's still here, you might have a chance, huh? Yeah. Moses says, what happens if Forex goes away? Well, I think you have bigger problems to worry about than that. And the second thing is, everything I teach you in Forex and that you develop as your own skill will be applicable to any market. Whether you're trading a digital currency, a cryptocurrency, gold, oil, wheat, soybean futures, S&P 500 options, you will be successful at. Now, would you have to learn how to trade options? Yeah, but you already know how to learn how to trade because I've taught you how to trade. You'll have the patience, you'll have the discipline, you'll have the drive, you'll have all the most important things that are required. See, look, if you fail at Forex, you're going to fail at trading options. That's what I'm saying. If you fail at trading Forex, you're going to fail at trading Bitcoin. If you fail at trading Forex, you're going to fail at trading oil. And probably real estate. And, I don't know, all the other none. Okay? All the other stuff. So what I'm much more focused, and you know this if you're a subscriber to this channel, you will know that I preach the skills that are required to become a success. I haven't thrown down 7 trades for you to copy. I would get way more people watching this channel if I just threw down a bunch of trades. Cool. I'm not trying to become a YouTube millionaire. YouTube, I earn over $100 a month. Okay? I'm not interested in all that nonsense. Okay? So if you don't like the message of thinking like a business, trading like a business, having plans and strategies in place, and being in control of your behavior, not reacting to the market, stuff like that. If you don't like the fundamentals and stuff, then you do you, is all I can say. You do you. Okay? All right. So let's break this down. Let's, my mouse is now almost unusable. I replaced the battery, less than 2 weeks ago. Okay, dollar is strong, which is great. Euro still fairly weak. Pound starting to give stuff up. Aussie holding its own. CAD's holding its own, and Aussie's still stuck in the mud. So far, dollar and Swissy and yen look wonderful. The pound rolling over makes me feel better. Euro having been weak is great. CAD strong. I'm so happy for CAD. Aussie is surprisingly strong and resilient, so there's some hope there. So let's break this down into digestible pieces. Okay. Simon wants to know, do I have any other wisdom stories? No, that's it. After nearly 50 years of living, that's the only one I got. Nope, that's it. It's just the one. Okay. Let's take a look. Aussie is strong, but US dollar is stronger. Okay. So what I talked about yesterday in the day trading group, I outlined this and I said, you have permission to engage as a bull if you want to. But, and that's a big but, and I love those big but jokes. That's a big but. But you must recognize you are trading against the fundamental bias. So you make the decision, is what I said. And if you decide that we have a high and then a low and then this could go up, yeah, that's technically correct. But it's a counter trend trade. So you must decide, could it do that? Oh yeah, it totally could. Do you want to do that? Is that how you're going to position sell? That's up to you. Okay? So what has happened is we hit the moving averages and they held down. Look at that, I can barely use this mouse. Unbelievable. Oh, you can hear it whimpering. Anywho, yeah, so it kind of looks like it wants to resume. Don't worry about it though. It can still do this if you're a bull. But here's the thing. Even in periods of up, I'm still a down. Okay? In bullish periods of technical, right? In technically bullish periods, I'm still fundamentally bearish. Okay? So that's that. A bear enjoyed that daily bearish sell zone, but it's not actually a recommended daily bearish sell zone. It just happened to work. And I believe what happened to work is more of a weekly swing and moving average play. And here's the thing. Way back on Sunday, we realized we were out of position and that on many of these pairs, there could be a big pullback. And the trade would then be like that. Okay? Maybe, I don't know if we highlighted this one specifically because, I mean, maybe, but there was a lot of other trades that did the same thing. Okay? Can I look at euro dollar? No. Okay. Cool. So we are now at resumed the target. Here's the pullback from yesterday. I was clear. I'm still a bear. My trade is still in. Okay. Now if I can move my mouse, wow, it's getting complicated. You can see my entry on the trade is here. Can you see it? I sold at resistance. Yeah, but besides that, why did you sell it? I sold it because I was a bear at resistance. You're like, that's it? Uh-huh. Okay, cool. So this is the current stop. Okay, that's the current stop. Trying to move this here. Whoa. Okay, so that's 300 pips. And the target is, what, 100 pips lower? So I should be able to get 500 pips out of this, but not until next week. Nin says, Nin's losing money. Should Nin do something about it? That's up to you. It's up to you. I don't know. Okay. I don't know what your trade plan was. Okay. Looking at pound dollar, this was an example on Sunday that we were worried about the up. Okay. Again, it hit the obvious. I said last night that I was worried about the setup comparing the previous day's daily candle with yesterday's previous candle. And I said, the problem, I guess it wasn't this one, because on a different pair, we had something very similar. And the lowest low was higher than the previous day's lowest low, and the highest high was higher than the previous day's highest high. And I'm like, off of obvious support, that is a real red flag. Now, this one actually had, a higher high and a lower low, so it's indifferent. Okay. And it looks like bears put new positions on. Okay. And this is where it takes a while for newer traders to discern that that's not necessarily buying. Yeah, that's right, Darko. Tomorrow, on Thursday, the swing trading group meets and we plan out next week's trades. And we also talk a lot about fundamentals and we go through charts together. We do group work and have conversations. You're going to make friendships with other traders that are trying to perfect their game as well. Really serious, talented people. So it's a great opportunity to learn by interacting with people that are trying to achieve the same thing you're trying to achieve. Meanwhile, right, you have 65 hours of training videos to go through. Okay, joining the swing trading group, the meetings are usually about 3 hours long, 2 hours maybe. Maybe it's more like 2 hours, sometimes more. Very interactive. It's not me lecturing. Here's the thing. It's a whopping $99 a month. Huge money. Huge. 99 bucks. I think it's priced in such a way that it will help. If you take a leap of faith, you'll find that it's a step off a curb, not a cliff. It's 99 bucks. You can walk in and it's amazing. So you should join. If you guys are asking questions, you're like, man, I really like this, but I got a million questions. 65 hours of videos will probably address some of your questions. And learning how to plan your trades days in advance is probably going to help. Okay, cool. So anyways, this pound hit that and now trying to resume its downward trend. Very cool. Very cool. It could have gone significantly higher. It hasn't yet, and it still could. So we'll see where we are around Thursday. Right now, on multiple pairs, it's trying to resume and retain its trend, which is great. Okay. Okay. You're a turtle trader. I like trend trading. I don't like the traditional the turtle formula, so I don't know which turtle strategy you're using. I'm good with the general idea of trend trading based on technical analysis. I'm fine with that. The original turtles had, I think, a flawed risk management system, but that's me personally. That's my personal opinion. So if it was pure technical, but you were able to manage the risk a little bit better, I'm happy for that. My personal trading style is probably a quantitative turtle approach that incorporates fundamentals. And so now you're like, well, Wayne, what's the whole point then? Okay. What's the whole point? How could you be both? Like a turtle trader would never use fundamentals. Never. They're like, fundamentals are gobbledygook. None of it makes sense. So everything's in the price. I'm like, well, you lean on technicals. I lean on technicals. But to me, the flaw of a turtle trader was that the market would drop and they would stay in. They're like, don't market time. What the hell are you talking about? It's all about market timing. Okay? So instead, what I would say, if you had a fundamental bias, you trade in the direction of the bias. And then when the trend in that direction technically can come to an end, like you have technical targets, you have technical rollovers, you have technical patterns, you exit for profit to avoid the drawdown. So very often a trend trader will say, do you have the guts to survive the inevitable pullback and drawdown? My answer is hell no. What the hell are you talking about? Absolutely not. Okay? No, I don't. So I have to make decisions not just when to get in, but to get out and then when to re-enter. Therefore, staying in the same trend that maybe a turtle trader would have, but instead trying to avoid the drawdowns by taking profit and then trying to get back in by re-entering. But you need to me, to have that kind of strength and fortitude, you have to, maybe it's even just emotionally wrap your arms around the idea of fundamentals and technicals and use them both, where the main idea of a turtle trader or of a trend trader or trend trading systems is it's only technical analysis. And I'm like, no. I like parts of that strategy. But I would not like add to a drawdown, double down on a loss and all these different things. Like, absolutely not. But the part that I like about trend trading is you trade in the direction of the trend. Now, I identify that technically and fundamentally, and then let your winners run. But boy, you got to take profit. You can't just keep letting it, just keeping it open. And then if you start to lose, add some more money to dollar cost average the thing and then ramp up and all that kind of stuff. I'm like, no, book your profit. Get out. You can always get back in. And we see that a lot. So like just even this week, like on this pound dollar, I'm a bear, but it was very obvious it was going to go up. Maybe for more than just one day, but it went up for one day. But it could go up for 3 or 4 days, was what I was talking about last night. Like, even if it goes up for a week, I'm still going to sell it. I just don't want to be in it during that period. I could, and that's how I used my euro dollar example. I said, right, I could stay in this for 2 or 3 days as it rises, and then hope it returns to bearishness. And in that point, I'd probably add to it. Now, do I add to it? That's the decision. Do I stay in it until it pulls back? That's a decision. Or do I take profit now and then re-enter later? Well, that's a decision. Which one is right? Well, apparently the one I made last night was right. But could have been wrong. I think that my phone keeps pinging me, and then I can't figure out why it's pinging me. I guess it's probably spam. Okay. So anywho, there you go. Well, Matrix says when he lets winners run, the market always wants to come full retrace. A lot of that can be related to seasonality. A lot of that can be related to where price is in its action. So like like I'll say it again. Looking at this period here, it almost certainly, like let's say an 80% chance, it was going to rise. So if you had entered down in here, you lost in here, and you're like, man, I was up 50 pips and now I'm out at break even. Yeah, well, the trade you were in was very mediocre to begin with. It should have been considered a day trade, and you should have taken profit because you likely hit the profit. And then in here, there's most likely going to be a retracement, and there was. And what I don't know is how far the retracement would be before it resumes its downward move, right? And so if you're only entering here, and I'm not saying you, I'm just saying this happens to a lot of people. They enter the trade so late in the trend that by the time they're in it, it works for a little bit and then it goes against them, right? And it's just because, well, you would have been better off selling it up here. That trade was designed by swing traders and presented to me. That's not me saying this is a trade I would make. This was developed by the swing trading group, presented to me, and we broke it down into pieces and looked at the opportunity and threat profile of it and how to get in. So if you were here, or the easier trade is here, you would not have been knocked out of break even on this pullback. But if you had entered on Monday, look, the trade was on Thursday or Thursday. See, both these trade setups are made on a Thursday. This is why the swing trading group meets on Thursday. Because if you show up on Monday and make a trade, very often you're at the end of the move already. You're like, but it's the first day of the week. Well, we took that trade on Thursday or Friday. We're taking profit on Monday or Tuesday. Okay? And so now it'd be like, now we seem to be riding the moving averages. Cool. That means this is very, very bearish. Okay? And look where my target is. That's the conservative target. And this came right from the meeting. So 2 weeks ago, sell here, exit here. That's the conservative target. Okay? The more aggressive target is 100 pips below that at 97. But as that occurs, the next target is now at 96 and probably falling. Euro dollar might be on the way to 95 by the middle of September. And we were selling at 105. That's 1,000 pips. You're like, but Wayne, how could you be talking about the middle of September? We're not even in September. Well, that's what the Wayne do. Okay, 1,000 pip move. All right. Let's move on. Let's do my WTI. We're elevated. Oh, for sure. We're elevated. Let me remove some of this because we've been testing these a while, and I want to remove them. If you can only see the way she trades, maybe you'd understand. Okay, so we're at that moment of truth. Right? It either makes its move up or it don't. My WTI. It's been a while since we reverted back to the mean, so that's kind of my concern for today. But besides that, it seems to be sort of an up, sideways, and so now maybe I can get an up. I understand, like, there's a great chance that it comes down, kicks off the EMA down here at 92, and then we have a resumption. Okay, well, I'll try again. Okay, I just don't want a lower low, so we'll see how today works out. I'm at 94.50. Okay, taking a look at Goldilocks. Gold. I'm a bear on gold, but it's made a higher high, so I need to be cautious. But then it double topped, and that gives me the new opportunity. That's my mouse. Okay, that's supposed to be a little steeper, but here's me doing a straight line. No kidding, I'm doing this. It's a straight line. So my mouse is a little bit gobbledygook. So I'll replace the mouse, but mouse battery again. I've done it multiple times. Maybe I need to get a $150 mouse. Huh? So anyway, so that's interesting. So you back it out to a 4 hour and you can see where I am right between the moving averages, and that's the sell zone. Cool. And what's really going to work for me is tomorrow, Jackson Hole, Powell comes out and says he's more aggressive. He's more aggressive. See, when people interpret what he said was less aggressive, gold came up. That's what I said. Then it came to this price. Then it would roll over and reverse. And it did. Then tomorrow, or Friday, Jackson Hole, Powell will come out and he says, yeah, the neutral rate is probably higher than the market thinks. Boom, this comes down like a ton of bricks with 2 hammers on it. And you'll say, Wayne, genius, genius, genius. I said, I know, right? Smart, good looking, but the best thing about me is my modesty. Okay. And then I'm watching Bitcoin. And lower high, lower low is what I stink. Okay. You see, I marked this out a couple of days ago. Now we zoom in. And yada, yada, yada. Huh? There's the rollover we talked about. And then there's the move. Uh-huh. Could be a rabbit, could be. Cool. So that's it. That's the story according to Wayne. I thank you for being part of this community. I can assure you your hard work and blood, sweat, and tears for years is worth it. I hope I make the journey informative, but also fun. I want to be one day one of those cool Harvard professors with long hair and is super fun but super knowledgeable. They're like, he crazy. Yeah. Okay. So thank you for being on this journey. I can tell you, in my day, I had to do it alone. And it was very difficult because I had no role models. My fear now is nobody is ever alone. And so you log into YouTube and other platforms, and any idiot can become a guru, whether they're qualified or not. Very few have ever been licensed or registered. Very few have a hardcore education in what they're teaching. I saw a guy the other day, and he's like, he was interviewed on a podcast, and he was a Forex trader, and he's been trading for over 5 years. Dude, I got stuff on my desk that's been here for 5 years, longer than 5 years. My God. So now my fear is you have nothing but role models, and many of them are probably teaching you stuff they think is right, but is probably not. And that's scary. Okay? Because I had to figure it out myself. So I know through the process of an elimination, I found at least 1,000 things that didn't work. And out of that, maybe 2 or 3 things that did work. Now I fear we have an army of people that watched a guru, and that guru watched a guru, and that guru watched a guru, and that guru watched a guru. And you have like a whole lineage of gurus, none of which know what the hell they're doing. That scares me. That scares me. That, fake news and disinformation, not that they're doing it intentionally. Oh my gosh. So, whatever. Be careful out there, man. Now you got to worry about disinformation. And I try to avoid that. So I do things like give you facts. And so like today, we looked at what professional global macro Forex traders are doing. I showed you using facts that it's the best thing you need to be focused on. And the second thing is you're probably extraordinarily over-leveraged. And I'm trying to teach you to be small and stay humble, develop skills like patience and discipline. And I believe that's the key to success. I think you should be focused on how you can do this for the next 20 years, not get rich quick. Because you should know, no matter how much you want that dream to be true, somewhere deep inside of you, you know it's probably not true. And think of all the other, just think of the real world. Nobody does a half-ass effort with a little bit of money and then gets rich quick. It just doesn't exist. It's foolish. It's childish. So instead, it's lots of hard work to create value over long periods of time. That's what it is. It's a simple equation. It's a simple proposition. Work really hard at creating real value over long periods of time. You will be successful. Okay? That's it. And the most important things of how much money will you make by the time you're ready to retire as a Forex trader? How much money will you make? Well, the 2 variables that matter most is how much time between now and the day you retire. So time is an important equation, right? And the second thing is how much money did you start with? And I suppose the third one is what is your monthly return? So if you started with 10,000, doing 2% a month with mini lots, bust out an Excel spreadsheet and calculate where you'll be in 10 years and in 25 years if you did 2% a month starting with $10,000. Remember, it's compounding. What I also would recommend is as your account size grows, let's say you grow it from 10,000 to 20,000, I don't want you to have 2 mini lots. Maybe have 1.5 mini lots. Okay? And so when you get to 5, maybe you're only at 2 mini lots when you're at 50, right? But anyways, do what you need to do. Go through the whole thing. Find out where you are in 25 years. When I did that, I found out I was over leveraged. Okay? Also, if you spend time, you'll say, oh, well, I want to pay myself. Do I pay myself monthly, quarterly, or annually? And how much? What percentage? If you made $10,000 profit, do you give yourself $10,000? Well, then your account never grows. Do you give yourself $5,000 and put $5,000 into the account? Well, then it does grow. Or do you find a way to never take money out of that account ever? Well, how do you do that, Wayne? Trade other people's money. This is how hedge fund managers get filthy stinking rich. It's not the 20%. So you need to learn how hedge fund managers get filthy stinking rich. What does the 20% performance fee pay for? The traders and some of the expenses and the slush fund, and right? And there's a small management fee, and that most of that goes to compliance. So the traders earn some money. So at the end, what's left over? Well, remember, if the fund manager, now let's assume they're already filthy stinking rich like their clients. So now I'm talking about Axelrod. I'm not talking about dollar bill. Dollar bill shows up, gets paid, and if his account is good at the end of the quarter or at the end of the year, he gets a bonus. I'm talking about Axelrod. How does Axelrod make billions and dollar bill makes, $7 million a year, and Axel gets $1 billion? How does that work? The math doesn't work out. No, Axelrod has his money in the fund and gets to keep 100% of those returns because it's his own money. I want you to think like Axelrod. So even if you start to make really good money trading Forex, if you do the spreadsheet, and by the way, this is one of the first things I did as a Forex trader. So if you do the spreadsheet, what you'll find is the more you pay yourself, the less money you make. And the less you pay yourself, the more money you will make. It's a paradox. And when you start to understand the paradox, then you'll do whatever it takes to accelerate that. So you'll always have a side gig. Always. Because you never want to touch that money. You never want to touch that money. So what's the best side gig? Be a professional trader, raise assets under management, right? And become a fund. Okay? Or when you join a hedge fund, they'll probably say, okay, well, you throw in $1 million. Okay? And you're like, $1 million? I don't have $1 million. Okay? But think of that. So 10 years from now, you'll probably be trading other people's money. You'll be living off the 20%, kind of like dollar bill. But the Axelrod in you is getting paid because you're not touching your money also in the fund. Remember, you get to keep 100% of that. Your clients get to keep 80% of their profits. 20% goes to your fund. So your fund, the company, now pays you through distributions, and you live on that. But if your trading account is growing at 20-30% a year, your money's in that trading account, and 100% of that. So you're every 3, 4, 5 years, depending on your returns, your money is doubling. Can you imagine if your money was doubling every 4 years because you got your money in the fund? So you start with 100,000, and then it's 200,000, then it's 400,000, then it's 800,000, then it's 1.6, and then it's 3.2, and then it's 6.4. And when 20 years goes by and you're ready to retire, you got your 10M, and you're probably retiring younger than you otherwise would. So you're retired at 55 instead of 65, and instead of having $2 million in cash to live on in your golden years, you'll have more than your golden years, and you'll have 10M instead of 2. And you won't be eating cat food for dinner or working at 70 years old at Starbucks because you get to eat the leftover muffins and you get free coffee and you get some sort of health benefit. I don't know, right? No, you're living large. You're 55 and you got 10M and you're like, I'm going to spend the years of 55 to 65 traveling. I want to see the world. You want to be like Ozzy Osbourne and pee on the side of the Alamo wearing a dress. You're like, I've always wanted to do that. Hey, Ozzy Osbourne got to see the world. Look at all the cool things you can do if you have money. So you see, now I go through this whole story. And what's the key takeaway besides entertainment? Spend a week with an Excel spreadsheet and plan out your business for the next 10 and 25 years, month by month, quarter by quarter, year by year. Break your business down, income, expenses, levels of leverage, and grow your account size, and then play with them. Are you paying yourself or you're not paying yourself, and all that kind of stuff, and put it through the runs. And you're like, but Wayne, that'll take me like a week. That might be 5 to 10 hours a day for 7 days. I can't do that. And I say to you, son, that's why you're going to fail. I think you should stand tall and say, I can do anything, and I'm willing to do everything to succeed. I don't know how to do Excel. Take a damn course. Overcome the challenge. I don't know how to use Excel. What a sad state of affairs that would be. Oh, you want to make $100 million, but you won't learn how to use Excel? You can't find a way? You can't just figure it out? You can't find a YouTube tutorial? You can't take a $20 course on edX on how to do Excel? No, I don't have the time. I don't have the money. I don't have the passion. But I want to get rich. It's so delusional. Like that one little thing. I don't know how to use Excel. Well, then that's tough luck. Too bad. You were going to be a millionaire, but I get it. Excel's too impossible. There's nothing impossible. There's nothing that would stop me. Okay? There's nothing. I would be unstoppable. Okay? Unstoppable. Ridiculous, sickening work ethic. Okay? There's a lot of people here with it. If you've ever met some of my coaches back in the day, many of them have it. If you've met Ryan has a ridiculous, sickening work ethic. It's a common theme. Every person I know that's successful, in particular successful as financial market traders, every single one of them have a ridiculous, sickening work ethic. And they don't explode. They don't blow up their trading account. They don't self-sabotage because they deserve the success. You can see it in the way they walk. Head held high. I said a couple of nights ago to the day trading group, lace up your shoes, walk onto the court, and stand tall. Game 1 of the new season. Peace on earth. May the pips be with you. May our profits be above average. See you later. Yes, the oil trading course, we are meeting today at 4 p.m. We're going over legal contracts and compliance. Okay, but regulatory compliance in the sense that it'll impact valuation and really sort of how banking and financing gets done. Because remember, no one's going to bank you if you can't figure out the value of your project. So how do you do that? Well, there's compliance rules to that. So anyways, I'll see you later. Have a wonderful day. Thanks for being part of the community.